Hello and welcome to another update video about FETCH.AI FET is still in this same structure and is holding the main support region. This here is the main support area that I'm just moving a little bit to the right. This has really been very stable, very consistent, and it hasn't moved basically for a couple of months. So I'm always encouraging people to look for the, let's say, the stable element on a chart, and the stable element on this chart is clearly this support area, with next support levels being the $1.27 level and then the $1.57 level. This really this really is very, very important in terms of understanding whether the bigger picture overall structure breaks or not, because as long as we're holding $1.27, regardless of the microstructure in this correction really, but as long as the $1.27 level is holding, here, the idea is still alive that we are in an overall bullish structure, and that the fifth wave to the upside can send us into into the $5 region. So that's the idea. Obviously, then we can dive into the microstructures, which are obviously way less reliable and much more fragile. And then we can look at possible smaller time frame, micro support levels, micro resistances. And this gives us further clues about the relevant breakout points and so on, and invalidation points. But anybody who's just interested in the next larger rally to the upside, you might not need to worry so much about these microstructures, because the risk is that people get bearish when the price breaks the first initial micro support, but it actually doesn't change the overall thesis. Okay, the overall thesis might still be completely unchanged. The microstructure only tells us if we are already possibly in a breakout or not. And what it basically means is, if we, for example, break micro support, then it means that the chart can just reattempt another rally from a little bit lower, and that just the overall correction is not really, that the overall correction isn't really over. But that, again, that doesn't change the overall thesis. It doesn't mean that a larger downtrend is starting or anything. So that's very, very important to understand. A lot of people get caught up in these microstructures, and I like to track them as well. They are interesting and everything. It is just important not to focus too much on them, and if we focus on them, to really mention what it's about, right? So then we zoom in a bit, and we can see that it is possible, as per the yellow scenario, that here on the 13th of April, this correction completed. That's absolutely possible. If this is the case, and it is impossible at this stage to confirm it, because the market rallied, but only in 3 waves. So from a bullish point of view, from an optimistic point of view, I could call that a wave 1, but only in a diagonal pattern. So again, had this been a nice 5-wave move, I'd be a bit more optimistic, but it's not. So this is possibly a wave 1. Again, I mentioned it a few times now. The bullish hopes, they rest on an unreliable diagonal structure to the upside here, so the directly bullish hopes. So we can follow that. It's just important that obviously in any pullback now, the wave 2 support or wave 2 swing low must hold, and that's at $1.86. So the $1.86 level is a key level. I've been mentioning that for the last few weeks. This really needs to hold in order to keep the overall upside expectations, direct upside expectation from the yellow diagonal pattern, alive. Or I shouldn't say expectation, it's more like a potential, It's more potential. So, because, I'm not necessarily expecting it, I'm tracking it, I'm telling you the relevant support levels, I'm telling you the breakout points, but whatever happens in these corrections is a little bit noise, okay? It's a little bit noise. And had this been a 5-wave move to the upside, I'd be much clearer in my communication and say, okay, we've probably bottomed. At the moment, it is fairly uncertain, on the smaller time frame, but that's okay. We have some levels to watch that allow for reward to risk calculations, depending on how and where and if you want to position yourselves. Now, obviously, in this scenario, then, if we form the 1-2 setup, then this is the A, B, and the third wave to the upside. Sorry, the C wave in the third would have started, and this is like a 1, 2, then we get 3, 4, 5. That's sort of how this could unfold, right? But it needs to break minimally above the Friday high at around $2.42, and then follow through with a break above 252, that would increase the odds for the directly bullish yellow count. That should send us to $5 plus, let's say into the $5 area. Okay, let's not get ahead of ourselves. And then obviously it needs to hold the levels I told you they need to hold. And this basically, allows for this bullish interpretation. Okay, if we break micro support, which is here, $2.07, then it would not change the overall bigger picture, but it might shift probabilities towards the white count, that we come down a little lower, that a triangle pattern finished after an A wave bottomed. This is a B wave triangle, and we basically come down in a C wave. That's sort of, if it's a triangle, it would be short-term bearish because it's like trend continuation, right? We had this larger A wave down, and then this is a B wave. B waves are 5-wave movements, but they consist of corrective structures, and they form triangles, and they form lower highs and higher lows. And it takes a break below the red line to make this really much more likely. And and then what would be the next support levels? They are already on the chart. That's the advantage of Elliott wave, okay, because Elliott wave tells us at any point the relevant support and resistance levels, and also invalidation points and so on. And the next downside level to watch is $1.57. That's here the larger degree, 38.2 retracement. And that's typically also a key level for a fourth wave in general to watch. If you're familiar with Elliott wave, then you know that fourth waves tend to reach the 38.2 retracement. Well, they don't have to, but they tend to. So that's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.